Welcome back to the Sovereign Ratio. In the last couple of months, it's become very apparent to me that I have severely overestimated the knowledge that people have of basic TA. For me, it's something that I can just wake up in the middle of the night and practically do in my sleep, but I've noticed that for a lot of others that have requested specifically for me to do the basics, that a lot of people are interested but really don't know where to start. So this video is definitely geared toward the TA novice. If you're not a TA novice, I would love to have you watch the video, but I'm not sure what you will or will not pick up from this, as we are going to do a progressively more difficult series on TA to bring everybody up to speed to the best of my ability. If you're new here, please hit the subscribe button, the like button, and leave me a comment below. Alright, for the purposes of this video, we're using software called TradingView, which you can go to tradingview.com and check out what the very basic features are, or you can also look at the subscription plans. For most people that are not even necessarily day traders, but just regular long-term investors, I highly recommend that you get one of the advanced packages, and I will give you a little hint. The best time is usually Black Friday, which has long passed us. Usually really good deals around Black Friday and Cyber Monday. But regardless, I think the base price is $600 a year for the most advanced package, and I would happily pay that any day of the week because this is the staple program to use for trend analysis. In case you don't know, TA stands for trend analysis. So basically we're looking at charts, trying to find trends and what probabilistically will happen in the future. So really the first thing that you need to do is go ahead and set up an account on TradingView and at least look at the basic features to see if it's something that you like or are comfortable using. I'm going to assume that it is, and we're going to move forward. This is obviously one of my more complicated charts. We're going to start very fresh and just make a new chart right now. So I'm actually going to hit the plus sign here on the right hand side and hit create new chart. And then here on the right hand side, you can see there's a wide variety of options to choose from. For now, in this very basic grassroots type of TA lesson, I'm going to look on the right hand side and I'm going to click this box with the 3 lines, which brings up the list of assets that I can view. Now within that list, you can see that I have a lot of different groupings, which is, again, that's something that's probably a little bit more advanced, but you're essentially going to want to create a new list. You could say it's your name, you could say it's Jonathan's list, you could call it whatever you want. For me, I have things like stock market, Coinbase, MEXC, a lot of different lists that I use. But once you create a new list, we're going to call this one test. You can see that it's empty. So in order to monitor a stock or a crypto or an asset, we need to add it into that list. So now what we're going to do is hit the plus sign, and there's a lot of tabs here. There's all stocks, funds, futures, Forex, crypto, so on and so forth. Obviously, this is a crypto-based channel, so we're going to start with crypto. And what crypto do we all know about? Well, that's Bitcoin. So in the search symbol, you can go through and search crypto. What's much easier is to just type either Bitcoin, and you'll see there's a wide variety of options there, or you can type BTC, and you get more options. For this instance, I have a lot of markup on the index, so I'm going to use one that I don't normally use, which is Bitstamp, which happens to be the first one and is one of the oldest exchanges that has some of the longest streaks of data since Bitcoin Genesis. So we're just going to add that in. It pops up there on the right hand side and we click on it, which I already have it clicked on here. Now, in order to see a wider view of the chart, we're just going to go ahead and click on that box again, and then we get the entire complement of the chart area for our monitor. Now, the direction that I'm taking with this video is that you as the viewer don't know anything, and if you do already know things, then feel free to fast forward and go wherever you want within the video. I will hit it up with titles and chapters so you can go through and pick wherever you want to watch. For the sake of this, I'm going to assume that you know nothing. So at this particular time, I want to just point out a couple of things. This is what you see at first. When you get into an asset, you're going to see the name of the asset up here on the left. And then you're going to see a bunch of time frames here. Now, if you're just getting into TradingView, you're probably not going to have all of these time frames available. So what you can do is click on this little down arrow and adjust which times you want to see by putting a star to the right hand side and calling that a favorite, which will put it up here in this bar. Or you can also go down here to this kind of hidden area that is hard to see, and you can choose minutes, hours, days, weeks, and however many, whatever number you want that to be, and hit add, and it will add it to the list. And then you could also favorite that as well. Now again, very grassroots. What are we actually looking at here? Well, TradingView doesn't tell you explicitly, but I'm going to draw a couple of lines here. We're going to call that the x-axis, and we're going to call that the y-axis, right? So what this axis is time. The x-axis is time. So as we move forward this direction, time is moving forward, and time keeps continuing moving forward. Depending on what time frame you're on, it could be a day, it could be a minute, it could be a second, it could be whatever. But moving from left to right indicates time movement. Moving from bottom to top indicates price movement. So essentially this entire program is a function of time to price. Next thing that we should know is that every single one of these is called a candle. And the candle is colored specifically by default, green and red, green being upward movement on price, red being downward movement on price. Also, because this is a function of time, the candles that we're looking at, every single one of these candles represents the timeline up here on the top. So currently we're on the 1 day chart. So every one of these candles represents 1 day. If we're looking to trade or look at an asset on a shorter time frame, like what has it done in the last 15 minutes, we can simply click on that. And now every single one of these candles represents a new amount of time, which is 15 minutes that we selected on the top. So when it's basically a zoom in and zoom out. When you go to a shorter time frame, like 5 minutes or whatever, you're zooming in. Whenever you choose a monthly time frame, like we're gonna do right here, you're zooming way out, right? So this chart shows you all the way back to 2012 when you go to the monthly chart. When you go to the 15-minute chart, it shows you back to yesterday. That's really how the candles work. So it's a zooming in and zooming out feature essentially. And there are specific uses for all of that, which we're not going to go too deep into today, but that is the basics of what you're looking at. You're looking at a price to time function, and you're looking at an individual time function on every single one of those candles. So for just a quick tip for quality of life, if you don't like what you're looking at for whatever reason, you can actually just right click in the blank space on the graph or the chart, whatever you want to call it, go to settings, and then you can actually change the background color to be solid or gradient. You can change the color, like if you want that to be yellow, you can do that, which I would not recommend doing that. That looks horrible, but you can do that. Additionally, every single thing on this chart is its own entity. So the background is its own entity. The candles are their own entity. So if you click on the candles and you have a new option set here. So now if an upward price movement defaults to green, but you want it to be white, you can just change that to white, which is the body of the candle. And now the outside of the candle is green, but the inside of it is white. Or if you want it all to be white, you can just change it all to white. And now every upwards candle is white instead of green. So that's just like a little quality of life thing. And there are a lot of other options in here that you can look through. I don't think most people are going to take advantage of those, but just food for thought. You can click on individual items within TradingView, and there's a wide array of options that you have available to you for customization. So I've gone back out, changed the candle colors back to red and green, and I've zoomed out to what I consider to be the most effective chart for long-term planning, which is the 1 week chart. You can see I've clicked on the weekly here, and that's where we are. Now there are some more options immediately available to you, especially with the format of candle that you're looking at, because this is not the only format of candle that's available. There's a lot of others that will change the way that the appearance is. So if you click on range, you can see that it's a very different looking candle. We'll go into more specifics on that later, but for now, we are going to stick with the default option of regular candles. On the left-hand side of the screen, you'll notice another toolbar, which are essentially different indicators and drawings and other tools that you can use when you're doing trend analysis. So for example, you saw me earlier click on the trend line, and I drew a trend line like that. Right. So first and foremost, I think when you're looking at trend analysis, the very first tool that you can look at is a trend line, right? So if we look at this chart of Bitcoin on the 1 week, just looking at some data that's happened here in the last couple of years, there's something that I don't know if it's apparent to you, but for the trained brain, it's extremely apparent right off the bat, right? So it doesn't look like price wants to go below this line. And the reason for that is because there was a low set here, and there was a low set here. Now that doesn't mean that the price cannot go below that trend line and make a new low, but what that means is for now, if price were to come back to this line at any point in time, it's an area of interest for me. And we're gonna leave it at that and call it an area of interest for now. But that's one very obvious trend line. Now there are other trend lines that are not so obvious, but if you have an analytical brain or you train your brain to find these things, you can see one right here. This one is much more complicated, but if you draw a trend line here, you can see one touch, two touch, three touch, four touch. That is a more advanced one. That's harder to identify, but it is there. And currently right now, you can see two things. This line is serving as what we call support. Support is where price will touch that line, and we hope that it bounces off of that line. But if it doesn't, that's okay too, because it gives us the information that we need to make a decision. So right now, this line that I just drew is serving as resistance. What that means is that when price goes up to that resistance line, that typically it likes to reject off of it. Now that doesn't mean that it's going to reject off of it, but what that does mean is that we've now established what we call a range. These two trend lines together, everything in between that is called a range or a trading range. So for now, we can see that there was a beautiful rejection off of this trend line. And now, where would the next logical point be? Well, for me, the next logical point would be down at this trend line. So I don't know how long it's going to take Bitcoin to get to that trend line. I don't know if it's going to get to that trend line, but TA is all about probabilities. So right now, probabilities are higher that Bitcoin, since it's rejected off of this line, it's going to retest this line, meaning it's going to revisit it and see what happens at that point. So if Bitcoin were to come down and touch this line, that would be what we call a test. Now from there, Bitcoin can bounce back up and we had a successful test. Or Bitcoin can go below it and we reject it. We did not have a successful test. Now, as a general rule, when an asset breaks a trend line, it will break it definitively and it almost always comes back to revisit it. Now that's not a definite, but it does happen more often than not. So let's just do an example here. Another tool on the left is this paintbrush tool where you can just freeform and draw lines like you were using Microsoft Paint, right? We're going to grab that and I'm going to show you, this is just a theoretical situation. If Bitcoin were to come down and do what we just identified as a test of this line and fail that line, let's say it fails it and drops below, generally assets like to retest that line. So they'll come back up, touch it again, and then there's another decision to be made. In this particular example, probabilities are way higher that that move is going to be down. But that's not always the case because markets are largely an effect of psychology. Sometimes people with a lot of money, what we call a market maker, will drive price down below an established trend line only to pop it right back up. So if that were to happen and then it held that line still, that's a classic setup for a fake out. This would be a buy signal. This would be a good buy signal, or at least a high probabilistic standpoint of a buy. So that's kind of what we're looking at when we look at trend lines. Is there a higher high established? Is there a lower low established? What is support? What is resistance? And what has the highest probability of outcome? So the next TA basic that we're going to look at, which we've mentioned briefly already, is called a trend and a break of trend. So using our test list that we've created here, I'm going to add a token that I know shows this really well, which is a token called the graph. And the graph happens to have a symbol of GRT. So I'm going to type GRT in here to add symbol. And I'm going to find what I would consider to be a high quality source of this, which is generally the oldest chart available. In this case, I know that Binance is an exchange for crypto that's been around for a very long time. So I'm going to choose that. Now this is the graph to Tether, which I will go into what Tether is later, but for now, just assume that Tether is $1. We're going to call that $1. USDT, you can see here on the right, USDT stands for USD Tether, which we're going to call that $1. All right. So looking at the chart of the graph, we're on the weekly chart. I'm not going to use that to show a break of trend or what a trend is. We're going to zoom in a little bit. Let's go to the 4-hour chart on the graph. Now, here's another trick. Right now, this looks pretty useless, right? This data is not very user-friendly, but if you go over to the price axis here, and you just double-click your mouse, TradingView fits that in for you. It makes it much more palatable. It makes it a lot easier. You can contract and expand price also if you do a single click and drag. And you can also use the wheel of your mouse to zoom out. So it's kind of a combination of using your wheel on your mouse, doing this. You can see I'm just like, I'm just manipulating this chart to whatever looks best for me at this point, right? But the graph is a great example of a trend and trend break. So here's what we're gonna do. I'm gonna grab this tool over here on the left, which is basically a text box, right? So I'm gonna start back here where price was low. We can see here that we had what I would call a high. Hit okay? Now that looks like a high simply because it's, at the time, it was above everything else, right? That price point was way above everything that came before it. But if we move forward, we can see that eventually the price was higher than that. So now we have what I would call an HH, which is a higher high. So I'm gonna grab my tool here and move it over a little bit for you. So now we have a high and a higher high. And then what do we have? Actually, I'm gonna click on this and I'm gonna hit Control C to copy and Control V to paste. And I have a replication of that. So we have a high, a higher high, a higher high, and I'm gonna paste it again, and we have another higher high. So this is a good example of what we would call a trend. Things are continuing to move in one direction, whether that be up and to the right or down and to the right. It's moving in the same direction without actually creating something worse. So in this case, we would call that a lower low. So if we consider this to be a trend, this entire movement here, we now have to establish a low for there to be a trend. So now we have a low, which is right here. And then what we need to look for next is a lower low. So we're going to take the text box. That should be a higher low. We need a higher high and a higher low for an upwards trend. So we're actually going to grab that, and that's our higher low, right? This is our low. This is our higher low. We copy that and paste it. We have another higher low. But what do we have right here? This is the key point right here. We have a lower high. So if we grab another text box, LH, this is where trend is broken, at least for now. We don't have a lower low yet, but we do have a lower high. So once we have a lower high, and then we have a lower low, which would be any price below 0.1488 on this asset. If price were to come down anywhere below there, we would have both a lower high and a lower low, which we would call a break of trend. Now that we have that information, we can actually just take what we had earlier, which is a trend line, and find this low here and the next lowest low that we can find. So now because we have a low here and we have a low here, that is the least favorable trend line that we have, essentially. So if price were to come back down here, it just goes back to that same scenario that I showed you. If price retraces back to this trend line, it has two options. It can either bounce up, or it can come down here, bounce down, retest this trend line, and continue down. In this particular example, because of the current market conditions, I'm almost positive that it's going to be the second scenario, but there's no guarantees. Everything is simply a probability, and right now the probability is to the downside. But you can see we had a trend, we've broken the first half of that trend with a lower high, and now we're waiting for the second half of that trend to come to a conclusion with a lower low. Now, that doesn't mean that you need to exit your position if you're in a position on a lower low, but that does mean that as you continually learn about this, you can know when lower highs and higher highs come into effect, because this lower high right here would have been a fantastic place to exit this position if you were to have one, because chances are that it's going to break below this trend line and continue moving down. So one other thing I want to mention about trend lines is there are several types of trend lines as well. What we've essentially looked at in this video is diagonal trend lines, which are generally not as strong as a horizontal trend line. You can see right here that because of this particular example, there is a very clear horizontal trend line. You can see that there was a rejection here. There was almost a rejection here. This is kind of some choppy area. We call it choppy area when a decision can't be made and price kind of bounce up and down between a trend line. But you can see there are established points on this trend line where there's been a rejection, or what we call support. So rejection, rejection, chop, and then this was probably supposed to be support, but I'm guessing there was a liquidation event, which we will go into liquidations later. But you can see right now it's also kind of doing the same thing. It was support here at this point, and now it seems to be some sort of support as well. But I would bet just about anything that it's actually going to break this, test it, and then continue the downside. But horizontal trend lines tend to be much stronger than diagonal trend lines. And a trend line in itself, think of it like chipping away at a brick wall. The more you hammer at a brick wall, the weaker it gets. So if something is now support, like it's here, it's support, 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 support. Every time that price comes to a trend line, that trend line tends to weaken from a probabilistic standpoint. So the more times that something touches a trend line, the more apt it is to bust through that trend line. And I think the last point I want to make in this very basic video on TA is how a trend line appears from a higher chart to a lower chart. So let's go to we're currently looking at the 4-hour chart on this asset. Let's go down to the 15-minute chart and let's try to establish a trend line, right? So I can see one immediately. There's one right here, which price has touched several times. This would be a support trend line. So the next place that you would expect a move up to happen would be right here. And again, I literally just looked at this chart for the first time on the 15-minute. That's the very first thing that I saw. So between either having an analytical brain or simply training your brain to see these things, it's almost an immediate response. So I see a diagonal trend line very clearly right there. The next point of contact would be down here at like 0.162. So that is currently 2% away from where price is now. But just to give you an example of how to identify trend lines very quickly, it happens with experience and time. But if we take this 15-minute trend line that we've drawn and we go back to the 4-hour chart, you can see it's much, much smaller. So I think that helps give perspective on how time and price play to each other, right? Because in the big scheme of things, that 15-minute trend line really doesn't mean much. But on the 15-minute chart, it looks like a massive trend line. And if we go to something even bigger like the daily chart, it's almost not even there. And if we go to the weekly chart, you can't even see it. So that's kind of how the zoom in and zoom out feature correlates to what kind of candle time frame you're looking at. Every single one of these candles represents a week. Every single one of these candles represents 15 minutes. So that's another tool that you can use to either do a long-term type of trading style, a short-term type of trading style, or simply perfect the way that you exit and enter the market. So that's it for today for very basic TA 101. I hope you learned something here. I really want to educate people on how to use TA to make the best trading decisions from my friends, my family, and people that I've encountered in the crypto space that have asked me questions. And I've taken for granted their knowledge on TA. I want to expand that knowledge so that people can use this to make wise decisions. If you're new here, please hit the subscribe button, the like button, leave me a comment below. We will be back with more episodes of this, exploring more complicated topics as we progress forward. Thanks for coming by, and safe trading.